So trading demand and supply zones are one of the best ways to catch very violent moves in the market. This is because these zones are usually accompanied by the bank's institution many people want to be entering. So we'll be looking at what are supply and demand zones. I'll show you secrets how to identify them, how to trade them like the pros, how to identify high winning probability demand and supply zones, guys. Because most time when price reacts to supply zone like this, it will most likely fall. All right, and if you look very well from the example, you see that these are supply zones that I've identified, and each time price moves to a supply zone hit, it mostly have to drop, and if it hits a demand zone, it mostly goes up. So if you look, these are supply zones. Each time price hit a supply zone, it drops. If hit a supply zones, it drop. All right, and in this situation, you see that when price creates a supply zone, okay, it moves down. Now create a supply zone like this. Okay, as soon as price comes up and hit the supply zone, it's going to drop. Guys, imagine being able to catch big moves like this in the market. It means you'll be able to win with very high accuracy. So make sure that you watch this video to the end. Okay, traders, welcome to my channel. I am Full Kingsley. By the grace of God, I bring to you guys strategies, tutorials on the forex market, volatility indices, metals like gold, Nasdaq, VIX75, many other instruments. You want to subscribe to the channel by hitting on the subscribe button and notification bell to not miss out. Okay, so simply, what are supply and demand zones? Supply and demand zones are what? Simply zones in the market where there's influx of traders looking to be taking sales, where there's going to be high exchange. All right, they are going to be taking either buys or sell trades. Now if they happen to be taking sell trades, it will be supply zone. All right, but if you have something to pull down and then they're taking buy trades, it will be what? Demand zones. Okay, but in this situation, supply zones are mostly up, where traders are looking to be selling. Okay, where zones like this, where there are influx of people who will be looking to sell. If you see, this is an example of a trader we look today. Look at it. As soon as price got to this zone, we marked it was a supply zone, and what happened? Finally, price had to drop, and this is the zone here. Price has dropped more than 50 pips just within a London session today. All right, so that is what demand and supply zones are. Influx of traders wanting to be buying or selling, where most traders are going to be taking their trades, and that will cause a lot of volatility. All right, now how do we identify demand and supply zone? Okay, and how do we trade them like the pros? How do we identify high winning supply and demand zones? All right, now let me just shift this a little and then I demonstrate. Okay, supply and demand zones are created when we have very violent candlestick moves. All right, when we have violent candlestick moves that leaves behind gaps, they will usually tend to create demand and supply zones. Now this is a chart scenario which I'm going to demonstrate. All right, now identifying supply or demand zones, you identify what? Very strong bearish momentum candles. These are strong bearish momentum candles. As you can see there, you can see between 1, 2, 3, it could be above 3 candlesticks or 2 violent candlesticks that leaves behind imbalances. If you see space between candlestick, let's say before this candle and this, you can see there is a space between it. Okay, and this space between it is known as an imbalance. So it creates, when you see violent moves like this, price will leave behind a supply zone. Now you realize that we only have bearish candles here. Okay, we have just bearish candles, and the only bullish candle was this candle that was formed before the strong bearish move. Now in this situation, this candlestick is identified as what? This zone is identified as a supply zone. Now how do you trade this kind of supply zone? This is one of the most common way. What you do is you just pick your rectangle tool and then look at this candlestick that was the last green candle that was formed before this strong bearish move. You simply click here and then you plot it from the wick up to the wick down, right? And then you drag. That is a supply zone that you have identified right there. And what happened? You are basically going to wait for price to come back and tap to this zone here. Okay, now what you do is you can place a sell limit order. All right, you can sell a sell limit order that as soon as price comes up and hit this zone, it executes, it drops, because there are times where you will not even have the opportunity to enter, because as soon as price hits, it drops powerfully. Because remember, we say it is an influx of zone where there are there are a lot of orders. Many people are taking the trades based on the banks large volumes of trade, which will usually cause price to drop. So what you do now is you place your sell limit order 50% of this candlestick. right? Because you have identified the candlestick which was the only bearish candle. You place your order 50% of it, and then you wait for price. Okay, you can place a sell limit order here, okay, and then you place your stop loss above the candlestick. You could be above this candlestick here, and then you target the previous low. This is the previous low at the moment, right? Okay, and then you want to wait for price to come back and tap the zone. Okay, let's see. Right there, price comes up and enter the zone. So supposedly we entered our trade here, our stop loss above here, and then we have our first target at the previous low, which is here. That is already a very high risk to reward trade that we have already done there. Okay, we have our stop loss up there, and then wait for price. Okay, look at that, guys. Price drops powerfully and we got the trade. That is as simple as that. You can identify a demand or supply zone. Now, the second way in which you can identify a demand and a supply zone is by what? Simply plotting out zones where we have consolidation. We see price drops down. For instance, there are times where price will be dropping maybe in a downtrend, and all of a sudden we have some kind of consolidation like that. Okay, we have a minor consolidation, which sometimes it looks very tiny. Okay, in this situation, sometimes you can identify this to be supply zone. Okay, especially when after that price drops off powerfully with strong bullish or bearish candles in this situation, right? Because after that, if you see price drops down powerfully like this, okay, what you do is you just plot out the zone. You wait for price to come back and tap the zone. You sell here at 50%, your stop loss above there. You target the previous low. At the meantime, you are going to get that trade hit. All right, let's do a demonstration. Okay, this is an example. All right, you see price drops and we have what? A consolidation. All right, after a consolidation we have a sharp down move. This sharp down move up here, it leaves behind a supply zone. What we do is we place our sell limit order at this zone here, and then we place our entry or our target at the previous low. This is where our target is supposed to be. Our stop loss above there, guys. Look at that risk to reward ratio there, like 1:5, and then you just wait for price to come out and tap the zone. All right, and then you are good to go. Let's see how it plays out. All right, price taps and executes our trade already. It went up right up to 80%. Remember, our stop loss is above the zone, and then let's see how it plays out. Boom. That is it, guys. Price is dropping. Price hit our target, guys. That is powerful, as just as simple as you can have it there. So that is how you can identify supply and demand zones. Okay, well, for this moment, this is a demand a supply zone. For example, right, in a demand scenario, you simply have what? You simply have the opposite. You have an opposite for a demand scenario. You see price creating or moving up. What happened? It creates a consolidation. Once it causes a consolidation, it drops, it moves up powerfully. What you do, you plot the zone and wait for price to come back. You execute your trade, and boom, price moves. Or you see very strong bullish candles, right? A time comes, you see very strong bullish candles where they form without over reversing. You wait for these strong bullish candles as they create. All right, what you do, you simply identify the last bearish candle that was formed before the strong bullish move. You just identify, plot it out. Your buy order is at this point here at the middle. Your stop loss is here. Then you wait for price to come back and tap to the zone. When price comes back and tap, you have entered your trade. Price is going to move. That is simple demand and supply strategy, guys, that works effectively. All right, and now let's move to our last thing. We have talked about what supply and demand zones, how to identify them, how to trade them like pros. Like, now, how do we identify high probability demand and supply zone? Now, this is an example of what I'm going to share with you using this first example. This is a supply zone that we have identified here. And now, if you want to identify a supply zone, number one rule is that what? The supply zone, there has to be a break of structure. Okay, right, now if you look at our chart here, you see that we have a strong down move, we have consolidation. Now price created what? A consolidation here, and was left behind a supply here. Okay, or let's say left behind a support zone there. Okay, and now you see that price have actually broke through here. It has broken through, it has broke structure. Okay, why? Because normally this is the supply zone that was created, right? But now if it just comes down and maybe let's say just come and goes, right, you sell, it will not be good. It needs to break this structure, create a new low. then pull back to the zone before you take your trade. That's number one rule. All right. Number two rule is they should be what? A very strong or strong momentum candles that leave behind what we call imbalances. Imbalance simply means that what you see that as price move with this strong bearish candle. Let me just zoom a little so that you can see clearer. All right, so that the demonstration can be clearer. If you look at this candlestick, for instance, this candlestick is not the same as this candlestick. It's not the same like this, so it's a very strong bearish candle. And if you look at it very well, the candlestick have actually left behind what an imbalance. Okay, when we say an imbalance, it means that this candlestick, actually the candlestick before and after, they have not touched. Okay, so if you have to plot like this, you see that the wick of this candlestick, right, this is the wick of this candlestick have not touched the wick of this candlestick. All right, so this is the candlestick before and the candlestick after. Now if the 2 wicks actually touch here, it will not leave any imbalance. Okay, right. So for example, let's just take a simple scenario like this. For instance, you see that this candle here, or let's say this candlestick here, okay, the candlestick before this and the candlesticks after this, the wicks have touched. That's why you see that from here, this is the week have gone right up, this week have gone right up, and there is no imbalance here. It has just filled the gap, while here they have not filled gap. So this gap here will identify that the supply zone is good. If you look up here, these candlesticks are where have left as well. This candlestick have left behind a gap. Okay, the candlestick before, right, and then the candlestick after, that's left behind a gap here, which is known as imbalance, right? In this situation, in smaller time frames, you see that price has not yet filled the zone, so price will come back now to fill the zone here, and then you take your sell trade. Because if it doesn't fill, or if it doesn't fill in smaller time frame, it will simply mean that the candlestick price moved down, came back before going. But if it comes back and doesn't make it to this zone here in a bigger time frame, you see that the 2 wicks of the candlestick have not yet touched. That is number two conditions that you have to identify this. Then number three is that it has to be unmitigated, meaning that what? For instance, if you see that this is a supply zone here, there have not been any supply zone up here. All right, there have not been any supply zone to the left that was formed before price come back. All right, price came back to mitigate this zone or fill up these imbalances for the first time. There was no other candle that came up before price went down, so the zone was what? Unmitigated. Okay, for instance, if you want to consider, for instance, that this is a supply zone, if this happens to be a supply zone, now let's say from here the candlesticks that were formed here were very strong bearish candles, right, that actually allowed just one bullish candle up here, meaning we would have still identified that this zone is a supply zone. All right, it will mean that it will not be a good supply zone because it has already been mitigated. We have this zone that have already been mitigated. There are situations where candlestick will drop like this, come and then mitigate the zone, drop again with very strong bearish candle where you will not see any bullish candle. So it will mean that this candle will automatically become the next supply zone, but in this situation it will not be a good entry because the zone have already been mitigated, right? So we have three things that we have talked about. In order to identify a high probability demand and supply zone, there has to be bearish momentum that breaks structure like this. For instance, there was a break of structure before price pulled back to the supply zone. We need to have what? Gaps or inefficiency, and this is usually from when we have strong momentum candles like this, right? Then basically the zone has to be unmitigated. It should not be a zone that price has already tapped, you know, in before. So basically that is it for today, guys. Thank you. If you find this video helpful, please give me a thumbs up. Just click on the thumbs up button. Please let me know your comment in the comment section. If you have any other suggestions, you can also drop as well. And please, if you have not joined our Telegram channel, you are free to. I'm going to drop a link in this video's description and also in the pinned comment, so that you can also, you know, get analysis in our Telegram community. So thank you for watching, guys. See you in the next video. I'm bringing to you videos like this oftenly.